Welcome back to the channel. Hey guys, if we were looking at our portfolios at the end of last week, you probably felt like you had a gut punch. There was definitely some wind taken out of our sails. We saw the Dow Jones Industrial Average go down by 2%. The S&P was down by almost 1.5%, and NASDAQ was down by just over 0.5%. It was the most volatile week of 2026 that we've seen yet. We continue, and the reason why is we saw a weak jobs report come out. We continue to see geopolitical tensions and crisis with Operation Epic Fury. Oil prices are now over $100 a barrel, and the S word has been in the headlines, stagflation. And while the broad market is panicking, the fundamentals for the memory titans just hit an all-time high. The reality, guys, is we are seeing a massive valuation gap in the market right now. Today, we're going to break down the four memory kings, Micron, SanDisk, Western Digital, and Seagate Technology, and why the sold-out reality for 2026 makes these stocks the most lopsided risk-reward play in the tech sector right now. We will look at the value gap and why this week may provide us with an opportunity to grab these stocks and these assets at a price we may not see again. But if you haven't done it already, hit like, hit subscribe first. I appreciate you spending time in the channel. We're trying to drive our subscriber count up over 4,000 for the month. So if you enjoy this content, hit subscribe, join the community. I put out a post and a video, at least one every single day. Let's dive in and talk about the first king, Micron. So guys, on your screen, you can see, I'm going to pull up investing.com. You can see how Micron finished the day on Friday at 370.30, down 6.75%, almost $27 down on the day. You can see in the pre-market coming in, getting down to about $3.50 a share right now. So the volatility in the market, the oil prices that are up almost $101 a barrel right now, the ongoing conflict is having significant impact on this sector, on the tech sector overall. The reality is this stock is trading right now at probably almost close to 15% from where its price target is of $410 a share. And we think about some things that are coming up for the stock. So March 18th is their earnings print. The expectation is that they'll deliver $8.58 a share with over $19 billion in the revenue. I think they're going to smash those numbers and just show the market what the demand has been for their products. But that would represent, just hitting analyst expectations would represent a 450% growth year over year in earnings. Phenomenal. Their biggest differentiator today in the market is the HBM3 product. It is not just the speed, it's the power of that product. The chip uses 30% less power than competitors. And in 2026, energy is the biggest constraint for all of AI. So if you save 30% of power, you win the contract. And this is the exact chip that won the Nvidia H200 contract for that reason. We also saw news that they've launched their low power DRAM product in the market just a few weeks ago. So they have very differentiated products. We know HBM4 is coming out. The CFO mentioned that it is hit full production this quarter, a quarter earlier than expected. It has reached the speeds of over 11 gigabytes per second, which is exactly what is needed for Nvidia's new Vera Rubin chip, which will be launching next quarter. So with the 2026 capacity 100% contracted, the opportunity to grab Micron at the price that we may see this week is phenomenal. Micron has pivoted from a cyclical gamble to a high visibility utility player in this field. Analysts expect $33 a share this year, and with a modest multiplier of 20x, this stock should hit and be north of $660 a share. Once we get through all this craziness, great opportunity for Micron. Let's jump over and take a look at the next king and titan of memory, which is SanDisk. And you can see on your screen, SanDisk also being affected by the volatility. Closed this week at $5.27 a share, down again 6 3/4, $38 off. Look at the pre-market, down another 5.5%. This stock from where it closed was already a 37% down from what its price target is of $7.24 a share. So there's significant upside to buy this stock, to buy SanDisk if you believe in the fundamentals of this company. Remember, last quarter, SanDisk's revenue jumped 61% year over year to $3 billion. And with the data centers soaring to be 64%, And since their spinoff, they've been focused on one thing: NAND scarcity in the market. Their product, their BiCS8 product, has achieved industry's highest capacity with a 2 terabyte QLC die. And the single 32 die stack now fits 8 terabytes in a single package. Plus, we know they announced their partnership with SK Hynix for the high bandwidth flash. They're building a flash that could ultimately replace RAM in AI interface. Analysts think that SanDisk could reach $1,400 a share if it trades at a modest 20x multiple. And we know that they're expecting $70 a share from this stock in 2027 revenue, 2027 earnings. Again, outstanding opportunity right now at SanDisk, or where it's going. If you're a believer in SanDisk and NAND and what they're going to do with HBM flash, high bandwidth flash, what a price to get in. Let's talk about Western next. Western, again, ended at 245.25 on Friday. It was down over 5%, about $14 a share. Look what's happening in the pre-market right now, down another almost $13 a share to 232. Guys, remember the price target right now for Western Digital is 321 a share, which where we closed on Friday was about a 31% upside. So we are even in a bigger opportunity with Western. Western is the capacity utility king. And while Flash gets all the sexy headlines, and we saw that with SanDisk, the bulk storage war is where the margins are hiding right now in memory. Their 40 terabyte SMR drive is currently in qualifications with 2 or 3 big hyperscalers. They've reached a 51% non-GAAP gross margin. It's in a level unheard of in the HDD space. Their strategy overall, Western, as you know, is they are sold out for 2026. Another sold out player, all of them are. And while some worry about their execution on HAMR, which are trying to get to that same space as Seagate, their 89% revenue mix from cloud services right now makes them a steady, high-margin utility play in this space. So Western Digital, another outstanding player. Get them off your bench, as you saw them in as the thumbnail. Great company, meeting a tremendous need in the market, trading at an unbelievably low price compared to where analysts say their price target should be. And then finally, let's jump to the last one, which is Seagate Technology. Seagate Technology, again, hit by the same factors as all three of these players last week. Ended the week at $352.80, down $14, down just about 4%. Pre-market, they're down another 15, another 4%, trading at $337. Remember, the price target for Seagate, the average analyst price target is $475 a share. Where we closed on Friday represented a 35% upside from what that price target was. This stock was down 13% last week. So we have, again, a tremendous opportunity with Seagate. Now, the market has been a bit nervous about the cost of their HAMR transition. But if you look, there was some news that we may have missed on March 4th with all the chaos in the marketplace, that Seagate is officially, they're shipping their 44 terabyte Mosaic 4 drives to 2 major hyperscalers right now. And this tech allows for 10 terabytes per disk of density. It improves energy efficiency by 47% over the older deployments. Seagate is the only one shipping this density at scale today. So high targets for this company, for this price is, high targets for this stock is $650. We know the average is $475, but $650, significant upside for Seagate Technology as well. So guys, Monday morning, we're going to see some volatility again. I predicted, we just see the news over the week. It's a perfect storm of this bearish momentum that ended on Friday. Steep sell-off that we saw, disappointing jobs, surging energy costs, the oil that's climbing now over $100 a barrel, and the military conflict that is rising and the tension that is happening in that marketplace. It's just creating a specter of stagflation. And furthermore, we will see, I expect we'll see more risk off this week as big institutional investors get ready and brace themselves for the CPI inflation data that'll come out on Wednesday, leading to probably a big defensive rotation out of tech stocks and into safer havens like gold, the dollar, what we traditionally see. So these price points for these 4 memory kings that I've talked about are going to be an absolute steal this week. In my opinion, the 4 memory kings that we highlight in the channel, Micron, SanDisk, Western Digital, and Seagate Technology, the fact that they have sold out capacity for 2026 and massive earnings growth, all those factors are hiding right now with all the macro noise that is happening in the marketplace. I'm looking for a valuation gap with these stocks. I'm going to ignore the red on the screen this week, and I'm just going to pay attention to the fundamentals because that is there with these companies. They are amazing players meeting an amazing demand in the marketplace. Don't let the noise, the distraction worry you, and keep these star players on the bench. Get these star players into the game, into your portfolio, because in the long run, they will pay off. Plus, when you look at the technical moats that these companies have that we covered, which would be HBM4, the Mozak 4, the high bandwidth flash that is coming, the hammer density that these companies can deliver in the marketplace right now, you will see, and I hope you clearly can see and understand why the memory super cycle is just getting started. Good luck this week, guys. Let's try to ignore all the noise that'll be in the marketplace because there will be a lot. And I look forward to seeing you in the next video. Hope you have a great night.